On this episode of After Earnings, the Nasdaq-100. Historically, it's been known as the tech index, closely associated with the rise of the internet age. But today, the Nasdaq-100 reflects a much broader mix of sectors, including consumer, healthcare, and industrial companies. But of course, those big tech names, including SpaceX, a recent addition, still grab headlines. Today, I'm joined by Emily Spurling, Senior Vice President and Global Head of Index at Nasdaq, to discuss the growth in access to the Nasdaq-100 through ETFs, why concentration has come about in the index, and how the process for entry into the Nasdaq-100 has evolved as companies stay private for longer pre-IPO. Let's get into it. Emily Spurling, SVP Global Head of Index at Nasdaq, what I have to think is one of the busiest exchanges in the world at the moment. I'm very excited to break down with you the Nasdaq-100 because it's, an index that gets so much attention. And I feel as though lots of folks who are both professional investors or retail investors refer to it often, but don't necessarily know all the details about what's in it, why is what's in it, and how it could evolve over time. So let's start with what really constitutes the Nasdaq-100. It's popularly thought of as a tech index. Is that still technically true?
That is technically not true and has never been true.
Never been true.
Never been true. So if we take a step back and we go back to the beginning, when the Nasdaq-100 was launched, it is very simply the top 100 non-financial companies listed on Nasdaq. So by virtue of what it is meant to represent, technology is not in its definition. When you think about Nasdaq, and Nasdaq being the first electronic exchange and disrupting the market in which we operate, and that brand of innovation and future forward thinking and technology, the companies that chose to list with us at the beginning were very much tech focused and technology at their core. So the Nasdaq-100 in its beginning was very much tech-focused and had a lot of technology companies within it, but it was just a representation of the market at that time. When you think about the eras of innovation over the past 40 years since it was launched, that has represented different things as evolution has happened in the economy. So early days technology index because of who was listing with us. But then when you think about innovators and how they utilize technology to really disrupt the industries that they work within, we have had the leaders in cloud, the leaders in AI today, the leaders across just the disruption with social media. We have had all of those companies that are focused on innovation and investing in innovation list with us, and that's what the brand has become of the Nasdaq-100.
Right, so it's almost a halo that's been created for those
It
that
is.
opted in. And I was so curious to see that Walmart decided to move its listing, switched over and came to Nasdaq. And I remember thinking at the time, that's clearly because Walmart wants to rebrand itself in the popular mindset as being a more tech-focused business.
Yeah, exactly. That's a great way to think about it. So, I think if you go back to what's the composition of the index itself, it's really today about 60% technology, where the company is actually a technology company in the industry sector, or the sector that it is within. And another 20% is consumer discretionary. And then there's a smattering of another 8 different sectors. And so it's really those companies, like you're saying, wanting to brand themselves as innovators in their space, and Walmart is definitely an example of that. And, that decision to move over to the Nasdaq exchange meant, based on its size and that it's not in the financial sector, that is a part of the Nasdaq-100 today.
And why not financials? Because many of them, I think, would self-identify almost as tech at this point.
So true. So, funny story. The Nasdaq-100 came to be because 40 years ago, the Nasdaq exchange decided to launch the Nasdaq-100 financial company.
Ah, there you go.
So we launched an index, and we needed a sister index to it to represent everybody else on our exchange. And, as I've been talking about with the companies that have ended up in that grouping of the top 100 non-financial companies, it's such a story. It's a story of the brands that we all love. It's a story of the companies that we interact with on a daily basis. And it's really become the one that has shown through over the years versus the starting.
Well, I've got to tell you, the market has recently seen some of its biggest listings ever. And so Nasdaq has been front and center of all of this. SpaceX. Talk us through the SpaceX moment.
The SpaceX moment was an incredible one for Nasdaq. Winning the biggest listing of all time. excitement and the journey that that company has been on and the impact that going public has on any company is an incredible moment. And for NASDAQ, again, this is a new space. What is the space economy for the future? And also the AI economy. And so being the chosen listing exchange for that type of company was amazing. When you think about the Nasdaq-100, SpaceX is one of the largest companies that has listed on NASDAQ, not just from an IPO perspective, but in today's market, the size of that company. So the Nasdaq-100 today represents and has SpaceX within it.
And SpaceX actually was included relatively quickly.
It was.
Others, it took a little bit longer. Companies are just getting bigger and bigger as they stay private for longer. What does that mean for that moment when they do decide to go public and go public on the NASDAQ in particular?
Absolutely. So companies are staying private so much longer. When you look at the ecosystem in the private sector, 10 years ago, there was probably around $5 trillion of assets invested in the private sector. Today, that is around $20 trillion. And when you look at direct investments into private companies, that gets to closer to 33 to 35 trillion. So $35 trillion of money is invested in the private sector, and it's allowing companies to stay private longer because the institutional shareholders that are investing in those companies, the infrastructure that is being built within the private sector is incredible. There's more data. There's more trading. Our very own NASDAQ private market enables the liquidity in the secondary market for companies and for funds. So there is more infrastructure supporting the length that companies can stay private, and they're choosing to do so. So when you think about the public markets and the investor access to these opportunities, the investors are waiting for access to these incredible companies that are going public, and they're waiting so much longer than they previously did. So when you look at companies going public, they're going public at sizes that we've never seen. SpaceX was an enormous IPO and an unprecedented size. And it's not just one company, it's many. When you look at the pipeline and the companies that are sitting in the private sector today, there are so many that are larger than the largest public companies in our index. And so an index needs to make sure that we're evolving with how the markets evolve. And if markets are now seeing companies of this size, scale, and maturity, then it should reflect the market that it is intended to reflect. So when companies go public and they're already the size of the 100, that's an important factor that we need to think about with our benchmark. And so we, recently actually evaluated how that entry process is meant to happen. And we went out to stakeholders. We followed the consultation process, which is part of our governance. And we asked for feedback, from investors, from clients, from ecosystem participants, and we were able to look at the data and say that the Nasdaq-100 is meant to reflect the top 100 non-financial companies listed on Nasdaq. And given the length of time, because of the different entry points, how do we facilitate that without causing investor confusion by not having the largest companies in our index? And so the fast entry process now, which allows companies in after 15 days if they are in the top 40 of the 100, is a way to allow those entry points in a very smooth, natural fashion for the index, because we also ensure that it's a representation of float and it doesn't disrupt the overall portfolio construction. And a lot of other index providers have the same thing as well. So again, it's a reflection of the market, and that's what we have to stay true to.
How has that changed the composition of the index? And let me just frame this. SpaceX, which we just talked about, is now roughly number 7 in the Nasdaq-100. You've got the top 5 names in the Nasdaq-100 coming to about 49.6% of the total index. You've got real concentration. Not all of it was because people were coming to market later.
No.
But they're both sets, is one of the factors. Talk about concentration for us.
Sure. So I think concentration is in the Nasdaq-100 just a reflection of the value that those companies are in the market. It's not a reflection of the construction of the index. It's a reflection of the market value that people within investors are putting that value onto the companies. So our index, I think you mentioned SpaceX is number 7. It's number 7 by ranking, but it is not number 7 by weighting. So what we do for the index is we rank based on your total market capitalization, and then we weight the index based on more of the liquidity and shares available. So the top, the concentration in the index is a result of these major companies being such a large part of the economy today. It's not a construction element. And when you think about that, these companies are enormously scaled, very profitable, and really driving a lot of value across the entire economy. And that's what the Nasdaq-100 is meant to represent. It's meant to represent, who are the innovation leaders, who are the companies leading the 21st century. And at the end of the day, it's a pure large cap growth index that is reflective of the market. And so concentration is a piece of what the market has become.
There's one I'm wondering if it's going to get included, which is SK Hynix. Slightly different beast. It's traded as an ADR. But could a company like that, even though it's not regular way shares, find its way in the Nasdaq-100?
Yes, it could. So the ADR structure is just a different security type listed on our exchange, but our benchmark, the Nasdaq-100, does include ADRs. And so if the shares traded of the ADR itself reach the size where their total market capitalization of those shares would be the size that could fit within the Nasdaq-100 today, where you're looking at the smallest company today is probably around trading between 50 and 60 billion. If those shares get to that value, then yes, it would be ranked within the 100. And at different points during the year, there's different entry points. So any index will have a reconstitution and a rebalance. Reconstitution is usually annual and rebalance is quarterly. And so there's different entry points for companies that reach the size of that total 100 market cap, listed market cap.
And so broad strokes, what is the inclusion criteria in the index?
Broad strokes, top 100 non-financial companies listed on NASDAQ. Our index is not committee-driven. It's entirely systematic and rules-based. And there are not other factors related to a company's P&L that come into play, whether they get in or not. And that is, that is a representation of just what the benchmark is meant to do. It's meant to reflect the market, not take other factors into account. And investors have total choice in terms of we offer products today that do take cash flow or profitability into account. The Nasdaq-100 itself does not.
To your point earlier, it's formulaic,
yes.
The way in which this all comes together.
Yes.
Let's talk about access. Now, access used to be mainly institutional. We've seen the surge, the rise of retail investors. But for both those pockets of capital, there has been an increase in demand in ETFs, for ETFs. Mm-hmm. And we've seen a lot of access to the Nasdaq-100 and others coming about through ETF technology. What's changed? Why has that actually happened? What shift has facilitated those new ETF partners?
Oh, the exchange-traded fund revolution is amazing. So the exchange-traded fund itself is all about transparency and accessibility. So it is a fund structure that is immediately available across all brokerage platforms. Retail investors have access to it in many different ways, which is very different in the past where you might have had access to a particular platform to get a particular product that had some type of theme or benchmark. And today, the exchange-traded fund vehicle is what allows everybody to kind of have this broad choice and access points that didn't exist before, which is why it was more available to the institutional space. I think exchange-traded funds, today there's over 15 trillion in assets behind the exchange-traded fund space. When it first started, it was very much synonymous with passive products and indexing. So the Nasdaq-100 as a benchmark was a perfect fit for the exchange-traded fund vehicle and really took off in that world. It's a retail story, it's an easily accessible product, and it's a very low-cost diversified way to access a broad-based benchmark that is innovation themed. And so if that's what investors want, they have easy access to it.
And how do the ETF partners work with you?
So ETF partners are our clients. Our index is the strategy behind the product they bring to market. They are the ones facilitating the trading and the investor fiduciary duty and making sure that the products are available on all the platforms. We are the data behind and the story behind the product that they put in market. So we work very closely on a consistent basis to make sure that we're in the market telling the story, we're in the market helping with distribution and access for our clients, and it's a great partnership.
How do you help with distribution?
So because we're the storytellers, we create a ton of content. We make sure there's broad awareness of what the product is and what it represents. And we work with multiple issuers. So as an index provider, you're able to work with multiple different providers in the space so that, again, you're reaching investors across the globe and across different investor types.
So let's think about the next 10 years. We've seen this enormous change when it comes to ETF in recent years. Looking into your crystal ball, Emily, what kinds of changes do you see coming that could reshape the index?
Yeah, I wish I had a crystal ball. That would be nice. So I think when I think about, again, the eras of evolution throughout the Nasdaq-100's history, we have had the opportunity to reflect what is happening in the economy. Because the innovators in each of the different industries, like we talked about, the only criteria is a non-financial company. And so who are the innovators across multiple different sectors? Who's harnessing AI? Who's harnessing technology to drive their business further? And who's really investing? If you look at the data, companies within the Nasdaq-100 invest in research and development at 1.3 times the companies in the S&P 500. So, and if you take out overlap, it's something like 13 times. So they're real innovators. And so wherever the economy goes, the greatest thing about the Nasdaq-100, or why it gets me so excited, is that it is a reflection of what's happening. And it's not that I have a crystal ball to say where it will go to make sure that it goes in that direction. It's really a reflection of what's happening in the market, where people are placing value, where are they investing, and then what is Nasdaq's brand in the market.
What's been the most interesting area where you wouldn't have thought you'd have seen that innovation surface, but you've seen it, but it has nevertheless come up?
Oh, great question. I mean, you kind of know it will happen in healthcare. You know it will happen in technology itself. I think some of the areas that we've been talking about recently, even in the food and beverage space.
That's interesting.
Yes, there's a ton of different innovators in the food and beverage space that, when you get back to it, how can they improve the efficiency in their delivery, et cetera? It's amazing to see how AI and technology can help all companies scale and grow.
Emily Spurling, SVP Global Head of Index at Nasdaq. Thank you for joining.
Thank you so much.
I'm Anne Berry. Thank you for tuning into After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends. We'll see you next time.